Should you consider using offshore financial centers or tax havens to protect your wealth? It is not illegal to move funds to tax-advantaged states, unless it's for the sole purpose of hiding income from the tax authorities. You may, however, unwittingly increase your chances of being audited. While some individuals and companies may use tax havens for legitimate benefits such as asset protection or international tax planning, others may exploit them for illicit purposes like tax evasion or money laundering. This has led to increased scrutiny and efforts by governments and international organizations to combat the misuse of offshore financial centers. The term tax haven often carries negative connotations. The EU defines a tax haven as a jurisdiction that is non-compliant with tax transparency standards set by international bodies. However, from a purely financial perspective, several jurisdictions offer low or zero tax regimes, strong privacy laws, and stable political environments, which make them attractive to businesses and individuals seeking a lower tax burden. Some jurisdictions have residency or business activity requirements to enjoy their full tax benefits. Personal income that is generated in a different nation is generally taxed in the country where it was earned, but the tax havens often exempt such income from further taxation. Corporations, on the other hand, are taxed based on the location of their headquarters, but most countries have rules and treaties in place to limit the erosion of their tax base. Taking full advantage of zero or low tax jurisdictions requires meticulous tax planning. It is important to note that the mere transfer of money to these offshore locations does not relieve the individual or company of the obligation to pay taxes on their income. That being said, here is our list. Cayman Islands. The Cayman Islands have no corporate tax, no withholding tax, and no capital gains tax. Popular with hedge funds and financial services companies. Switzerland. The European nation of Switzerland has varying cantonal or regional tax benefits, and renowned secrecy laws. Popular with banking and high net worth individuals. Luxembourg. The small European nation of Luxembourg, which has the highest GDP per capita in the world, has favorable laws for investment funds and holding companies. Popular with investment funds, European headquarters for multinational corporations. Singapore. Singapore is an island city-state in Southeast Asia bordering Malaysia to the north and Indonesia to the south. It has no capital gains tax and low corporate tax rates. Popular with multinational corporations, technology companies. Bermuda. Bermuda is a British overseas territory in the North Atlantic Ocean. It has no corporate income tax, withholding tax, capital gains tax, or sales tax or VAT. Popular for insurance and reinsurance companies. Monaco. The Principality of Monaco is an independent and sovereign country located on the northern coast of the Mediterranean Sea, bordering France and Italy. It has no personal income tax for residents. Popular with high net worth individuals. Isle of Man. The Isle of Man is a self-governing British Crown dependency in the Irish Sea located between Great Britain and Ireland. It has no corporate tax for most companies, and no capital gains tax. Popular with e-commerce and online gambling businesses. The Bahamas. The Commonwealth of the Bahamas constitutes an island nation situated in the Lucayan archipelago of the West Indies, located in the North Atlantic. It has no corporate tax, no income tax, and no capital gains tax. Popular with wealthy individuals and trusts. Panama. Panama is a Central American nation between the Caribbean Sea and the Pacific Ocean and bordering Colombia and Costa Rica. It has no taxes on offshore profits. This is a preferred destination for shipping companies, trusts. Ireland. Ireland is the second biggest island in Europe. It is separated from Great Britain to its east by the North Channel, the Irish Sea, and St. George's Channel. It has a low corporate tax rate of 12.5%, but is now coming under intense international scrutiny. Popular with technology and pharmaceutical companies. Jersey. The largest of the Channel Islands, Jersey is an autonomous island nation located in the Channel Islands that is subject to the British monarchy. Jersey is known for its strong financial services and low or no taxes. It attracts high net worth individuals, family offices, and corporate structures due to its tax benefits and confidentiality. Netherlands. Netherlands or Holland is a country located in northwestern Europe, nestled between Belgium, Germany and the North Sea. It is attractive for multinational corporations due to its extensive network of bilateral tax treaties and favorable structures for holding companies. British Virgin Islands. The British Virgin Islands are a British overseas territory in the Caribbean consisting of the four main islands of Tortola, Virgin Gorda, Anegada and Joost van Dyke's. The island's offshore financial services industry attracts a wide range of clients, including high net worth individuals, multinational corporations, and investment funds. Andorra, Cyprus, and Malta. Andorra is a small, independent principality located between France and Spain in the Pyrenees Mountains. Cyprus is a European or Middle Eastern island in the Mediterranean Sea, south of Turkey. The Republic of Malta is an archipelago of 7 islands in the middle of the Mediterranean Sea. These tax havens attract individuals and companies seeking low or no taxes, financial privacy, and favorable business jurisdictions. Context and regulations. Over the years, regulatory bodies like the Organization for Economic County Operation and Development, OECD, have been scrutinizing tax havens to ensure they adhere to international tax transparency standards. The EU also maintains a blacklist and grey list of tax jurisdictions that don't meet their tax governance standards, and companies operating in these countries may be subject to sanctions or additional reporting requirements. Please note that tax laws and international agreements are continually changing. Therefore, it is crucial to research current resources for the most accurate and up-to-date information. The topic of hiding money in tax haven states must be approached with caution. It is important to consult with legal and tax professionals to ensure compliance with applicable laws and regulations. Please note that the list we shared with you is not exhaustive. And remember, U.S. citizens are still required to file income tax returns regardless of where they reside. Now you know. Thank you for watching.